So a lot of familiar faces here today. I'll do a quick introduction. So we've got Faheem here from Altair, Bob from Pinnacle Silver and Gold, and then Scott Williamson from Blackstone Minerals. And guys, I might get you guys to do maybe a short intro on yourself, your background, and then just a little bit about what your company does. And I know Faheem, you've just spent 10 minutes doing that. Yeah, I might start with Scott if that's okay.
Yeah, thanks, Kevin. So Scott Williamson, CEO and MD of Blackstone Minerals. I've been in this role now about 8 years. My background's in mining engineering. Started my career in underground mining with Rio Tinto. Didn't like the bureaucracy, and so I've always gone with smaller and smaller companies, and then landed in Blackstone. When I started Blackstone, we were focused on cobalt. Then we had to pivot to nickel as the battery chemistry mix changed, but we've now just pivoted into copper gold. So yeah, I'm glad we're not talking about nickel today. So thank you.
Yeah, and Bob?
Yeah, thanks. My name's Bob Archer. I'm a geologist by training. I've been in this business for about 45 years, and started Pinnacle, took over management in 2021, but really building it up fresh, I guess you could say, this year with the new project that we acquired just at the end of February. But even though the project itself is new, we're basically building it up with a proven business model that I used to develop my previous company, Great Panther Silver, and where we started that with a concept, just myself and my Mexican business partner, and build that into a mid-tier mining company over the course of 13 years. So using that same business model to build up Pinnacle, and really just getting going with that now. So it's exciting times, just getting started.
Cool. And for him?
I mean, you guys just heard me present, but CEO of Altair Minerals, we just acquired a project in Guyana. Quite exciting stuff. Background professionally is in engineering and project management. Been doing the sort of M&A stuff in the mining space for about 10 years now. Last transaction was at Veritas. We took that from pretty much not a single hole drilled to the largest, or one of the largest and highest grade ionic clay rare earth deposits. And now the focus is in Altair and looking to replicate similar success.
Yeah, very good. And yeah, today's topic is obviously why back a junior explorer, gold explorer, over bullion. So many of you guys probably are very familiar with gold. For those of you who don't know, as of about 20 minutes ago, gold is the spot price is 4,200 US an ounce. So definitely record high. And I think one thing, in case you also don't know, is only last week did it first break 4,000, right? So it's a very unique dynamic at the moment where gold, is plus 5% over the course of a week, plus 55% over the last 12 months. Of course, that's the bullion. But gold isn't just about bullion, it's about everyone up and down the value chain. So yeah, it's very good timing to be having this conversation. We've got a brilliant panel. We've got people with very different experiences and different pathways to where they are today. And also across the three companies, not a single one of them operates in the same jurisdiction. So we'll dive into that as well. And yeah, perfect time to be talking about gold, obviously. So I guess the first topic we'll talk about is more so around value creation in exploration, right? So broadly speaking, you've got bullion, but then you've got producers, you've got developers, you've got explorers. Each of them have a very different dynamic. And today we'll be talking about explorers. So I might go in the opposite direction, start Faheem with yourself. Yeah, and just talk a little bit more about how you look at value creation when it comes to explorers. And yeah, specifically also at Altair, what you've seen.
Yeah, I think it's two angles. There's the actual project level and corporate level. I think from corporate level, comes down to communication. You have shareholders that put in, their hard-earned cash behind you, and you got to stay in communication with the market, provide updates as companies that go silent for 6-8 months and not really get anything out. So that's on the corporate level, but on the project level, I think it really just comes down to drilling. It's a sort of drill to kill game, and a lot of the problems are that companies are almost afraid to drill. And that's, comes down to investors. They see one blank hole and they might think it's all done. But yeah, it just comes down to drill to kill sort of mentality, and very few people do it very well. I mean, one of the best examples is, say, Robert Friedland. What he did at Kamoa-Kakula, for example, found already, I think it was a 700 million ton deposit, and then he went down another, I think, 10 kilometers south and found Kakula, which was even better. And you know, it's just a mentality of what's out there, the explorer's mentality, and I think that's the best way you can sort of build value as a junior explorer.
I also want to talk a little bit more about the acquisition that you've just done, right? So obviously drilling and all that's one thing, but also, I guess broadly speaking, M&A, bringing on new projects and things like that.
Yeah.
How did you look at that whole process out there, and how did you kind of land on the project that you ended up landing on?
Okay, I guess with Altair, I joined 20 months ago, and we had an exciting portfolio of projects. For me, it was all about bang for buck. I mean, junior, the biggest issue is going to be financing without diluting your shareholders to death. So we had a quite exciting asset in South Australia, which we still believe has huge amount of potential. But the thinking was that, you know, if we were to drill 10 holes there, that was a kilometer deep, for example, we're setting ourselves back probably $6 million. And, you know, to explain to shareholders, I've used up $6 million of your cash, but found nothing. It wasn't a situation we thought would be the best use of money. We began looking for another asset. And when this sort of opportunity came, I mean, I reviewed assets all across the globe. This one was the one where the moment you saw it, I just told the board straight away that we got to get this. I don't care what happens. And yeah, that's how the project sort of came along. It was a very long 6-month negotiation process, but it's really sort of something that's exceptional in terms of, you know, we know there's mineralization there. It's a matter of scale, and we've got the scale because it is the biggest project that's ever happened in the country. And that's, you know, we're in the right commodity as well. Sort of naturally just built value, and I think the sort of additional corporate side is really communicating what makes it so unique, what makes it so special. And a lot of people don't understand in Guyana how that permit structure is broken, and why, you know, why didn't other majors step into the country? And communicating that to the shareholders is really the crux of sort of building value for a junior as well, and explaining that story. Yeah.
Gotcha. Thank you. And then Bob, just around the topic of value creation when it comes to exploration, how do you look at that?
Well, we're taking quite a different approach. You know, we're not just pure exploration. I guess we'd say we're more focused on development because we want to get into production as quickly as possible. So our focus has been on acquiring a smaller scale operation that was in production before, and then advancing it to get it back into production, and then trying to, you know, build the company out of cash flow as opposed to relying on the markets. You know, and it's a formula that worked well for us in previous years with Great Panther, and you know, one of the strong forces behind that is, well, I guess you could say two things. One is just coming off of you know, several really lousy years in the market where it's been very, very difficult to raise money for anything almost. And then the second thing is just looking at the divergence of the spot prices that you were just mentioning versus the cost of production, which haven't come up nearly as quickly. And so, you know, what that's done is that it's underscored the profit margin for all the producers. And, you know, this is really unprecedented in the industry where you know, producers are seeing this level of profit. We've never seen this before, and so, you know, seeing that just makes me want to get there that much faster. And having done it before, it's you know, even though I'm an exploration geologist by training, you know, we've gone through this process before, and I put together the team and you know, the mining engineers and the production scenario and so on, and all the permitting and everything. So it's something that is it's different for sure. But as I say, we've done it before, and we think we can do it again. And from an M&A standpoint, that's also factoring into what we're doing as well, because this initial project that we have, even though it's on the smallest side, that's by design because it's affordable. And but even as we're doing that and moving this one forward into production, we're already looking for where the next one is going to be. Where's that next project, and then we can just kind of leapfrog them. Going from there and building one on top of the other. So that's basically how we plan to build the company.
Very good. And Scott?
Yeah, so I started my career in the finance space as a mining analyst, and my role was to analyze mining stocks for a living. And people would sort of ask, well, what's the risk reward? And I've always said the reward is you could make 10 times your money, but the risk is you could halve your money. And but it's actually worse than that. Like when friends and family ask, well, should I buy Blackstone? I said, well, only put in what you're willing to lose the whole lot. And I'll give you an example with Blackstone. So the Lassonde curve is real and it hurts. So when we went into nickel, we were 5 cents. We went to 80 cents. We put out our PFS. We landed at 2.5 cents. So you can make 10 times your money, but you can almost lose the whole lot. So you can go 10 times negative as well, down to nearly zero. So it is a high risk, high reward game. But if you get the right ones, you can make easily 10 times your money. The problem I've got as the MD is I can't sell. But anyone at Blackstone who says, oh, well, I hung on and I say, well, at least you can sell. I can't. So some people would have made good money on that run up. The ones that couldn't sell weren't as successful. But the risk reward is definitely not for the faint-hearted. But I do think the whole idea of drill to kill, I'm a big fan of that as well. I think the last thing you want to do is back someone who's not going to actually drill the hole. So there's a lot of people in the industry that sit around just taking a paycheck, but you got to keep an eye on how much equity your MD and your board and your executive team own, and if they've got a decent amount of equity, then they're aligned to your shareholding. So and I think. Yeah, the last thing you want to do is be sitting on an asset and not drilling it. So, now's the time to drill to kill. I'm a big fan of that too.
Yeah, 100%. And I think it's very interesting that the underlying spot, for example, is doing really well. So one part or the natural question that comes out of that is, what on the value chain, vertically or downstream, has the most torque towards that, right? And usually the venture end of the market has a different risk profile, as Scott said, but at the same time, the upside is massive, right? I want to talk a little bit more about jurisdictional risk and reward. So for those of you who aren't familiar, each of these three companies here operate in a different jurisdiction. Scott's main asset is in the Philippines, Bob, Mexico, Faheem, Guyana, right? So I'm going to go back maybe in the opposite order. So Scott, again, you first, into how you look at jurisdictional risk as well as the reward. So when you went into the Philippines with your merger with IDM at the start of the year, it wasn't a country that Blackstone was in previously, but at the same time, there was a prize on the other end. So how did you look at that?
Yeah, and I think the emerging markets space, let's call it, is a great place for juniors to acquire, discover world-class assets. So as a junior, we can take on assets with a little higher risk profile. We've got the patience to do the work on the ground, to spend the time with the local communities. It is a lot more difficult to operate in these jurisdictions, so there's no doubt that there is more of a challenge there. But we've just acquired a 20 million ounce of gold equivalent ore body for $18 million. Anywhere else in the world, that's going to cost you billions of dollars. That's the opportunity. And I suppose for us, having already operated in Vietnam, it was a very natural fit. Jump across the South China Sea, very similar operating environment. We're very happy in Philippines. Really strong skills, and the geologists are as good as anywhere in the world. And we had the same experience in Vietnam. So in some ways, I prefer operating in Southeast Asia than when I've operated in Australia and Africa, for example. So very happy with the jurisdiction, not without its challenges, but it's these sorts of jurisdictions that juniors can make major world-class discoveries and acquisitions.
Yep. Bob?
Yeah, I think every jurisdiction in the world has its challenges and pros and cons, and but for Mexico, I've been working there for almost 30 years now. And it's a jurisdiction that I'm very comfortable with. Seeing lots of governments come and go, policies change, and so on. But one of the things I think in any jurisdiction, and I'm sure my colleagues here will agree with me, is that you really need some local partners. You need to understand the local culture, working with local people, and that's going to be key to anyone's success, regardless of where you are in the world. And we certainly do that in Mexico. 100% of our employees in Mexico are Mexican. And I'm starting to actually rebuild the team that I worked with there before. And, having done that, that's really key to developing relationships with local communities, because that really goes a long way also in building out the operations. It's, it's not just about the governments and the politics and so on, but because if you don't have that local social license, you're just not going anywhere. So that's been key for us. We certainly find that has worked well for us in the past, and so far that's been a big focus of ours as well.
Great. And Faheem?
Yeah, in terms of jurisdictional risk, I think spot on with what Bob said. Every place has pros and cons. I mean, I've worked on sort of drill and exploration programs in Australia, North America, Brazil, Peru, and now Guyana as well. Each place there was a challenge. I think with Australia, I mean, your access to skilled labor, logistics, infrastructure is just top tier. But then you've got, the permitting timelines are a bit slower than other places. I think for me, the perfect balance was Brazil. That was probably the easiest place I've been to operate, run an exploration program. Guyana is literally attached to Brazil to the north. And I think it's up there in terms of how easy it is. You can jump right into drilling. There's no sort of long permitting timeline, water permits, social permits, and so on. You don't have sort of native title issues. So very easy place to operate. I think the only thing it really lacks versus Brazil is the infrastructure, and there is a skilled labor is a bit lower than what you have available in Brazil as well. But yeah, there's pros and cons, and I think just going off what Scott said, the advantage that juniors really have is how agile we can move, how much better we can build community relations versus a major, and using that to our advantage as well. Definitely, you can run through a program, make a world-class discovery a lot faster.
Yeah, and I think one thing which I think is interesting. So I spend a lot of my time in Perth. Western Australia is a very well-known, say, gold mining jurisdiction in the world, which is great. It's familiar, but one of the downsides towards that is it's pretty well picked over, right? You look into Eastern Goldfields, your Kalgoorlie, there's drill holes absolutely everywhere. There's pits everywhere. So if you do a deal there, it's probably fully priced. And Scott, something you mentioned earlier is, yeah, for that kind of quality deposit mine project, you would have had to pay a lot more in jurisdictions where probably more people are looking. So that's a really big advantage for those of you who are looking at explorers, is knowledge, know-how in regions where people aren't looking. You're going to find the best deals and probably ore bodies that, yeah, beat what you probably find in WA nowadays, as an example, or Nevada for that case. I want to talk a little bit more as to this investor sentiment topic on the junior exploration side when it comes to gold. I think that's very important. When you have a listed company, it's not like when you're private. You do have to manage investors on almost a day-to-day. So doing that well is obviously key. But I wanted to ask you guys a little bit more as how you found the sentiment. And again, we're privileged to have experience from both the TSX and the ASX's perspective. So Bob, I might go back to you to start off the TSX's side and how you found investor sentiment going into this year, going into your new project, drilling and all of that.
It's fortunately starting to change to the positive. We've come through several brutal years for junior companies, just trying to survive really as much as anything. And it's been very, very difficult. This year, things have started to change finally. But as it always happens in these cycles, people start investing in the larger companies, and they just gradually filter down, through the food chain, as we call it, and getting down to the eventually the junior explorers. And so in North America, I find that we're just starting to get to that point now, where the junior explorers are getting financed. We started this project and really fundraising for this back in February. And so even at that point, that market wasn't quite there yet. That sentiment wasn't there. And so for the last couple of financings that we've done this year, the majority of our funding has actually come from Europe, from Central and Eastern Europe. So we've had to kind of think outside the box, so to speak, and look for alternative markets until the North American market starts to come back around. And we're just starting to see that happen now. It's really only been in the last couple of months, I would say, that things have started to turn. So it's been a long time coming. And we're certainly happy to see it. But yeah, that's kind of the way it's evolved this year.
Yeah, and from what you've seen, so has that happened all of a sudden? Have you had to go out there and educate, say, shareholders when it comes to what's happened to gold, or has that just happened organically with specifically North American investors?
It's for some of the Eastern European shareholders, yeah, there's been a little bit of an educational aspect to it because it's something that they're not that familiar with, and a lot of them certainly are not that familiar with capital markets in general. But in North America, I think it's difficult to say why it's taken so long in so many ways, because with the metal prices coming back, especially gold and silver, the way they have, and there's been just a massive divergence between the metal prices and the share prices of the companies, so people have been talking about this for many months now, and it's like, what's it going to take to get the average retail investor to come back to the market, and it could be that just we've come through such a long drought. The last peak was in 2011. And so effectively, we've come through like a 14-year bear market. And during that time frame, a lot of people have effectively lost a lot of money. I mean, let's be honest. And so trying to convince people that, this time really is different, that's something that is maybe just taking a little longer to kind of sink in, and it's starting to take hold now. But it's just, there are a lot of deals getting done, a lot of bought deals, upsizing, oversubscribed deals, that sort of thing. But those are still more with the well-established companies and better known projects and more advanced projects. But for the juniors, junior explorers just starting out, new names, new projects, it's still challenging. So we're just really getting going with that phase.
Very good. And Faheem, I wanted to ask you, since for Altair, your project acquisition happened relatively recently, and it was also really positive, well received. The share price is up around 10x, if I'm not mistaken, or close to 10x.
10x from our lows. From I guess the last sort of financing round, it's up over 5x.
Yeah, which is probably shows you how well exploration assets can be received in a strong market. So yeah, how's the investor sentiment been? So I'll maybe break it down into two elements, which is before you knew the share price would 5x, how were investors when it came to an exploration asset in Guyana? And then obviously, what does it look like now?
Yeah, I think, I mean, just to take it back one step, just what Bob said, that the last 3 years were a brutal, brutal market. And look, I wasn't around for the GFC. I was a bit too young, and I'm thank God I wasn't around then. But yeah, every sort of investor that went through that I spoke to, I mean, I didn't speak to a single investor that didn't tell me that what we're experiencing now feels much worse than GFC, the last 3 years we just went through. So this sort of turnaround that we've had and sentiments increasing, I still think it's at our infancy, just given the last 3 years. For Altair, before we sort of had the transaction, we sort of, I was always bullish on gold, and we saw that sentiment turn around. We were just we were commodity agnostic. We were more so looking for quality, something that we can actually build and develop. But fortunately, it ended up being in gold as well. In terms of investor sentiment, I mean, we just completed, with the transaction, we did a $3.2 million raise. We received over $13 million of bids for that. Obviously, we didn't upsize, we didn't accept anything because management and board, we own 22% of the company ourselves. So we are very pedantic about dilution. We know it was a quality asset. It will get a much higher valuation. We found no need to be diluting the company at a low valuation. So the sentiment was there. The sentiment's still there. Our share prices at 52-week highs. But we knew there was quality, and we would get a very good valuation out of the project. So yeah, we didn't want to dilute early on, and I think just looking at the share price and the sort of how the asset's been received sort of speaks to the sort of sentiment of quality gets rewarded right now in this market, whereas in the last 3 years, quality, unless it was truly exceptional, didn't really get rewarded. And truly exceptional, on the TSX would be like a Snowline, Rupert Resources, Collective Mining, Reunion Gold, and so on. So only a handful of companies, and every other explorer was more or less left in the dust.
Very much now that's probably changed, and
Slowly changing, yeah, for the TSX, yeah.
Yeah, and I think the ASX has been kind of on the same boat as well, where it's been a tough few years, but hopefully the sentiments changed as of probably early in this year. And Scott, you've obviously been very busy this year with your M&A and also raisings. How have you found the sentiment, one, at the M&A side earlier this year, as well as with your $22 million placement around the middle of the year?
Yeah, so it's only probably the last 2 weeks that I've been comfortable to say that we are in a bull market. So yes, we are. It's been a long time coming. Yes, over 10 years. I feel we've had some mini bulls in select commodities over the last 10 years, but a full resources bull market like where I feel like we're going into, it's been a long time coming. Yeah, so we raised 22 million 3 months ago. That was well timed, but I think if we were to do it today, it would be even easier. It was well supported. I think for us, we're lucky we've got the copper angle as well. It gives us a real opportunity to distinguish ourselves from other gold miners. There is a lot of gold in the industry and a lot of gold stocks to compete with. So on the copper space, it's probably a little bit easier for us. I think I've just done 2 trips to North America in the last 3 or 4 weeks. I do feel like the North American market's potentially doing better than the Australian market right now. For example, so we've got a copper gold porphyry. It wasn't that long ago you'd be scared to say the word porphyry. It's a particular type of geology that needs a large capex, but the strategic value of a porphyry is now recognised globally. For example, when I went to North America, they were saying, well, why are you so cheap? And I said, well, I'm not sure. I'm just trying to get the story out there. But I do think the TSX understands porphyries probably better than the ASX. Most of our peers are on the TSX, and most of our peers have got really strong valuations. So we're going to be keeping an eye on our peers on the TSX because a lot of them are going very well. But yeah, it's fair to say the bull market's finally here. Gold's done its thing. Silver, platinum, palladium, copper's next. Look out. And then the whole base metals complex will come behind it as well. So there's no doubt that this is a industry-wide bull market that we're in, and may it last as long as the last one.
Yeah, and I think that's an interesting dynamic as well. And I was looking at this earlier in the week, and there's only been 4 occasions in the last 100 years for gold where the spot price in any given 12-month period has gone up more than 50%, right? So the first one's obviously in the 1970s when the US dollar, I guess, depegged from the gold standard. Then there's 2007 before the GFC, in 2019, roundabout when the first trade war happened, and now. And each time it's not just 50%, it's usually a decade-long push upwards. In the first instance, it more than 20x, right? So I think, yes, Scott, to what you mentioned previously, usually momentum begets more momentum, and hopefully, yeah, if it's starting to flow down to the expiration end, that's going to be very helpful. And I wanted to maybe take it back one thing that we didn't cover, which is the ASX. And Australia obviously has a really rich history when it comes to mining, especially on the venture end as well. For Scott and Faheem, have you guys seen a lot of your money still come out of Australia, or has it been Asia? Has it also been Europe, as Bob mentioned? Where has the pools of capital been from?
Yeah, I think from our perspective, our shareholder base is really Australia and Asia dominant, and we've always been able to attract Australian and Asian institutions. The last raise, it did broaden out a bit, so there was a little bit from Europe and North America. But for us, being Asia focused and an ASX listing, it's very much an Australia-Asia dominant register for us. But I think the opportunity for us is to try and tap into that North American market because they do understand the porphyry. So we'll be pushing into North America as much as we can.
And for us, we've got a pretty diversified, I guess, shareholding base. But I'd say most of the money right now is coming out of Australia. In terms of what Scott said, that it depends on your asset. For example, porphyries 100% agree that TSX and the Canadians just understand porphyries. Australia, in terms of not just porphyries, but just copper developers, there aren't many quality gold copper developers on a sort of bulk tonnage scale. For us as well, we think there's a huge opportunity in North America, which we just completed the transaction yesterday, but we'll be looking into tapping into that market because you look at our peers at North America, every single one of our peers on that Guyana Shield is in North America. There's an opportunity with us being the only explorer in the Guyana Shield within Australia, but also, looking at some of the peers, Reunion Gold built it to $1 billion takeover. G2 Gold, they're sitting at a $1.2 billion AUD market cap. Greenheart Gold, they're sitting at $250 million plus market cap. Only, completed a small program. So where we're valued at now, we think it's about educating the Australian market, but also tapping into the market that really understands Guyana as well. We think if this was a TSX company and, the TSX and the Canadians love Guyana, we would probably be valued at twice as what we are today. So we'll bring some of that money into the company as well.
Very good. And I might close off with one topic, which is outlook, right? So obviously things are going very well thus this far. Each of these 3 companies have performed very well share price wise, but looking forwards a little bit, Bob, and I'll start with you, is what other tailwinds do you see for the gold exploration space? And yeah, how do you see the sector, I guess, evolving, and specifically for Pinnacle as well? Maybe just quickly, what's 1 or 2 things that you've got upcoming that will hopefully move the needle?
I think one of the biggest tailwinds right now really is just the metal prices themselves. It's we're starting to see just mainstream media talking about gold in particular, but now with silver breaking through $50 for the first time ever, and or closing at that price, I think that's starting to garner a lot of attention. And once that starts to happen, that's when you start to bring in a lot of the generalists into this. And that's something that we haven't seen in a very, very long time. So I think that's once that starts to happen in a big way, then that's going to provide a massive tailwind for the entire industry, really. So that's probably the biggest key thing, I think. And I mean, for us specifically, that in itself, again, is a key component because, we want to get into production quickly and start to generate cash flow. So the metal prices are obviously critical for us in that respect. So the faster we can get there, the faster we can start making money, and that's something they're really pushing towards. And so just the development of the project, and for people just to watch the various milestones as we progress on that. It's a relatively young project, only 8 months or so. So it's early stages, but if we can get to production within about a 2-year time frame, that's really what we're shooting for.
Scott, I'll get you to speak.
Yeah, I think it comes back to what Bob was saying earlier, that flow of money. So they've made money in the producers, they'll roll out of the producers into the developers. When the developers get fair value, they'll roll into the explorers. So I think we're still sort of in that phase where the investors are rolling out of producers into developers, and then finally it'll come down to the explorers. So from Blackstone perspective, we're trying to reset the Lassonde curve and become an explorer, but we've already got a development ready asset, so we're somewhere in between. But for us, it's really about unlocking the exploration opportunity that we see, but it's underpinned by this 20 million ounces of gold equivalent. So we're pretty lucky that we've got a really good inventory already, but now we can really unlock it with further exploration, geophysics, soils. Typical exploration techniques actually haven't been done. So this was a blind discovery that hasn't used modern systematic exploration techniques and geophysics, for example. So we want to do all that and start the drill rig spinning and and reset the Lassonde curve. So exciting times ahead.
And for him,
yeah, I think basically it is a top-down approach, as Bob and Scott mentioned. We usually, you see the bullion move, you start seeing majors start to print cash, you see a bit of consolidation, deals happen. I started noticing when Anglo took over Centamin, we had Northern Star and De Grey as well. We had Anglo and Endeavour as well do a deal, and then slowly that trickles down into the explorers, and that money starts flowing in. Explorers start taking more risk. There's more capital out there. So I just, this sort of market just brings forward more discoveries. I still think, funnily enough, that even though the money's probably been drier on the TSX in recent years, they've been much better than the Australians at making sort of world-class gold discoveries. The last sort of genuine world-class gold discovery I saw from an Australian company was probably De Grey. So it's been a while, and part of that also why we move forward with this project. We do want to put Australia back on the map in terms of to show that we can still make world-class discoveries, because in that time, in the last 5 years, you've had Snowline, Reunion, G2, Collective, heaps of sort of Canadian discoveries happen, and with the money coming back in now, it should flow into explorers, and hopefully there will be more discoveries coming from that money as well.
Yeah, very good. And I might just recap just to wrap up, just in the time that we have. So obviously you guys have heard from these three different companies, 3 different jurisdictions. One common element that seems to come through is producers have benefited a lot from the rise in the bullion price, but only now has that started flowing down to the more junior end. And tying it back to the topic, why back a junior explorer over bullion, I guess it's one of those things where it's not binary, right? So you don't just pick one or the other. It's like a real estate deal, which some of you might be familiar with. You've got mezzanine debt, you've got senior secured debt, right? So it's more about balancing the portfolio but it is worth noting that when an underlying commodity such as gold move, the question is, what do you want in your portfolio to give you the most torque towards that, right? And in this case, gold exploration is that element, right? And you can tell by the share prices, it has, at the very least, more than probably doubled for each of these guys, right? And worth also noting that central bank movements have been very positive on the gold side. The People's Bank of China, 11th consecutive month buying gold. So when you talk about tailwinds and you talk about torque on the exploration side, it is top down, and there's a lot of favorable tailwinds on the top level. Yeah, and I might wrap up. But did you want to?
Yeah, I was just going to say, there's really, I think there's one word that sort of answers that question of, bullion versus junior explorers, and that word is leverage.
Yep.
That's something that you just don't get buying bullion. And, you mentioned early on that the bullion price has gone up by 50% this year, whereas I think we've all seen our share prices go up by several times, this year or even less. And so, that's the leverage you get from investing in the juniors that you just don't see with bullion.
Yeah, absolutely. And I might wrap up with that. And I'd like to thank Scott, Bob, and Faheem for their time and sharing their thoughts.
Cheers. Thank you.
Thanks very much, Kevin.